Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media, project my financial opinions as we go, generally related to wealth building, commodities, and or financial topics. So let's dive in there. Let's see what people are sharing. If you want to follow me at finding_finance, and if you want to join our community, finding-value.com, where I dive deeper into all of these topics and subjects, you can interact with me directly, and we do have a coupon code special going on, 50% off the first month, only the first month for the monthly membership, and a much larger discount on the yearly membership if you want to move to the yearly. Mayday, Mayday, one word, is the coupon code. So coming into macro micro, global recession probability drops to 28.36, hitting a new low since June of 2022 and marking the 10th consecutive month below 50%. What's going on? I thought we were going to have a recession and it was in the bag, but looks like not so much. I don't know what exactly they use to determine the probability of a recession. If it's the yield curve tied in with a bunch of leading economic indicators, that's probably what my guess it is. But that's what the index is. And it looks like the index, as it goes up to a high percent probability on this, did actually end up in a lot of these recessions. 40% doesn't look like the 40% pushes us into a recession all that often. We were up in the 50 something percent range. And you know what? May or may not. Maybe we already went through a recession and it was just hidden with all the money printing that they've done from fiscal spending. So we could be in a slowdown. We just don't recognize it as a slowdown because of all the inflation and how they account for the inflation in the system. So we very well could be going through an economic slowdown back in 2022 or 2023. And we didn't account for it because they manipulate the inflation numbers and they printed a bunch of money, which goes into the GDP calculation. So they could essentially manipulate growth, GDP growth, even though we did not have growth by understating inflation, which is understating the CPI, but dumping a bunch of real money inflation into the system and not really accounting for that money in the CPI. So David Morgan, World Platinum Investment Council, so the forecast for platinum market deficit for full year has been revised upwards to 476,000 ounces in 2024. So we're going to be running a deficit in platinum. I think we ran almost a million ounce deficit, between 800,000 and a million ounce last year. Total platinum supply in Q1 of 24, the second lowest in our time series, with full year 2024 also forecast to be a near record low in terms of supply. Okay, we're running low supply, we're running deficits. I know for a fact that the major producers have done cutbacks based off of how low the price has been for the platinum group metal trio. The trio is rhodium, palladium, and platinum. Automotive demand at a 7-year high in both Q1 of 24 and for forecast full year of 2024. That's looking pretty good. So the demand is at a 7-year high, while our supply is falling off a cliff. What do you think is going to happen here with prices? What do you think my idea is on what could be a good investment here? Jewelry demand increased 5% in Q1 of 2024, driven by 53% year-on-year growth in India. Industrial demand fell from a record high in 2023, yet remains 17% above the pre-COVID average. Investment demand set to remain positive in 2024 for the second consecutive year, supported by bar and coin demand in China and also by myself. Above ground stocks forecast to hit a 4-year low for full year 2024. So we've got declining inventory. We've got deficits that we're running in platinum. We've got record, well, maybe not record high, but very high demand across the board for platinum. Good setup there. And we've got a very low ratio still of platinum versus all the other metals. Japan, amid a population decline, is seeing real estate prices plummet. That is what occurs when you have a demographic that declines. You're going to see your real estate market go down. And that's why ours is going up. SA platinum supply to fall 2% in 2024, says the World Platinum Council. The US bond market has now been in a drawdown for 45 months, by far the longest bond bear market in history. That is crazy. And is this the game ending move for the bond market? Well, no, it could be. It very well could be. If we continue to print money like we have been, and getting the inflation that we are, bonds are not going to like that. And they're going to continue to sell off, and you're going to see interest rates continue to go up. Now, I'm not stating that this is just going to continue to go down, 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 down in a straight line fashion. We're going to have a bounce at some point. We'll probably see interest rates pull back, which could very well be soon. We could have bonds go up for a period of time, and then we reconvene after a period of a pullback where rates go back up again. The markets move in waves. They don't go straight up or straight down. You need to know that as an investor. You need to know that the markets move in waves. 3 waves up, you get a 2 wave or a consolidation move, and then we could continue to the upside again. So Elliott wave theory is kind of what I'm talking about. You should probably check that out if you guys are interested to see what that is about if you're an investor. FT Commodities, platinum supply shortfall could drive price rally, says industry body. That's what the charts would suggest as well, is a price rally. I agree. Brian says peak oil is nowhere in sight. Last year, the IEA said global gasoline demand peaked in 2019, and electric vehicles meant that consumption would never return to pre-pandemic levels. IEA was wrong, is wrong. Global oil demand is heading to a record 103 million barrels per day, and this is the thirsty for oil. So since 1991, annual global oil demand has grown by just under 1.1 million barrels a day on average, boosted by rising population and economic activity. I don't know if we can turn this thing around anytime soon, guys, but oil's looking pretty solid from the demand aspect. Here's zoom out. We've got GameStop ripping it 115%. What is going on here, guys? Are we going back into speculative land? Do we have that much money in the system where people are still speculating on this crap? I mean, come on, guys. What is going on here? Oliver here, Oliver Grob. Things you don't see in bear markets, the copper smelter treatment costs in Asia just went negative. Absolutely crazy. I don't even see when I first heard this, I didn't even know what that meant. Going negative. You know what that means? I think it means that they don't have the raw material. So if you run out of raw material, your refining capacity the price for it will go down because you have a shortage of the actual material. I think the same thing's going to happen to refineries with oil. The refineries are probably going to eat it at some point in the future because we just don't have the oil to feed it. So I think the actual commodity and the producers of the commodities are going to go gangbusters in that type of scenario because everybody's going to want the physical thing. I also think investing in the physical metals or the physical item, whatever it may be that we're talking about, could do crazy things because that's really what people want. They don't want the paper derivative. They don't want the ETF if you can't get the physical metal. A refiner is going to want the oil or the heavy oil, whatever it is, to run their refineries. So I view it as the pricing power is going to go straight to the producers of the metals themselves, whatever metal it is, whether it be uranium, copper, it doesn't matter, whatever it is. Another one, it says copper market balance is under pressure. We've seen more supply disappointments and disruptions in recent months. Production at Codelco, the world's top supplier of the red metal, fell 10% to a little over 100,000 metric tons in March. There was another strike at MMG's large Las Bambas copper mine, one of the largest copper mines in South America. Glencore's copper production fell 2% last quarter and has been declining for more than 4 years. Copper production at Antofagasta, a major copper miner in Chile, was 129,000 tons quarter one of 2024, 11% lower than quarter one 2023. Anglo American lowered its 2024 output target for copper to between 730,000 to 790,000 tons from as much as 1 million, essentially removing the equivalent of a large copper mine from global supply. Production will fall even further in 2025 before starting to rise again the following year. KGHM Group, a large copper miner from Poland, reported lower than planned copper production. With smelters in Asia hungry for the red metal, the copper concentrate market turned from surplus to deficit. Still closed, one of the biggest supply disruptions was the government's ordered closure of one of the world's largest copper mines, First Quantum's Cobre Panama, which contributed over 330,000 tons of production in 2023. Global copper inventories were close to 30-year lows in terms of days of demand. This underscores the upside risk to the commodity price, given the increased pricing power it gives to producers. So this is the copper balance that we're looking at here. It says with seasonal surplus phase now at an end, we expect the deficit accumulation to build momentum into mid-year. GS global refined copper balance, and we are going into deficits starting now and accelerating in those deficits as time goes on. Copper looks to be pretty well positioned for higher prices. Eric says, if the consumer were really cracking, we doubt spending on fund-related services would be at record high. So personal consumption expenditures, selected fund-related services are at record highs. Yeah, that doesn't seem like a recession slowdown, at least not yet. Dow equals 1, we've got the silver versus money supply. It says silver is going to explode. So we've got our inverted shoulder, head, shoulder, a breakout of the downtrend line as well, and the horizontal line. So we're kind of just getting our way out of this big consolidation that we've been in since 2009. We've been in a big consolidation. We're starting to break out. HFI research says global crude inventories are going to draw starting now. We should see a pickup in refining margins going forward. We will wait for the market to validate our assumptions. So what he thinks, or whoever is behind this, says, I think what we are seeing on the physical oil market front is peak tightness for a while. Global refining margins have not kept up with the recent flat crude rally. Time spreads are also starting to peak here. A pause is due. Global crude inventories will build in April. And he said that back in April, and he thinks we're basically through that. Silver's on track with the possibility of a sudden upside reaction. So let's take a look at this big boy chart here from our boys North Star and bad charts. So silver, it says if silver moves as far and as fast as the black arrow depicts, I would expect a large correction afterwards, kind of the arc retest. So we've got the go line and we've passed the go line, and then the go even more line, which is the red horizontal that we are trying to break through right now. And if we go through the go even more line, I'm pretty sure that we're going to go even more. Yeah, we're going to get a big breakout, big run. So cool. I like the chart. Let me get my, there we go. Let's go back a little bigger there. So Cape volatility, Cape in terms of shipping, continues with May down nearly 2,000 bucks. Malmo is down nearly 3K to 26,000, which is near parity with the index. June still trading at 3K carry. So we've got this three hump consolidation that I think we're going through, and we just are putting in the third hump. I think oil is basically driving all this. Game of Trade says this is what an aggressive breakout looks like. Chinese stocks have seen a 12% rally with no pullbacks in just 14 trading days. The 46.29 resistance level is now just a hair breadth away. So here's the China ETF rolling on down. We've got a breakout, and you know what? There's probably a lot of really good entry points coming up in some of these Chinese stocks. Breakwave, freight futures, AM update, Capeside's down 4%, Panamax flat, VLCC and Suezmax are also flat under tankers. We've got Matt, should you contribute to a Roth or a pre-tax to your 401k? It says all else equal, here's one factor I consider. This is also what I use to consider what I should do pre-tax versus contributing to tax sheltered gaining accounts, which is the Roth 401k or Roth IRA. So if you are in a tax bracket, and what I do is I put pre-tax money in the 32+% category. I do exactly what this guy does. I try to knock my taxes down a certain amount using pre-tax. Then I go to the lower tax bracket, which is more Roth. I start putting more Roth in. So I do a mixture of pre-tax and Roth, and I have to do a backdoor Roth IRA. You can also contribute after-tax money into a 401k, which would essentially be a Roth 401k. So that is also another option. So I do a mixture of what this guy does exactly. Here's silver, a breakout in silver. I just like looking at the chart because it's broken out. We looked at it up above too. Breakwave, the cumulative volume of China's steel exports in the first 4 months of the year reached the highest level for the same period since 2016. So volumes of China steel exports, which is going to help shipping, dry bulk shipping. We've got red light, green light, wheat and precious metals hitting a new all-time high. And that looks really good, guys. We're about to run. If yields drop, I think gold and silver are going to run, and wheat and precious metals is going to be making a big move on this up and handle. EIA sees shale play nat gas production slipping in all but Permian and Bakken in June. So that's real interesting. Nat gas production slipping. I know the price is going up, but remember, there's a lag. When everybody cuts back and they stop drilling, production is going to continue to decline until they start to drill again and start to produce from that. So we might overshoot this whole thing. And this is a huge problem with nat gas. Using it as much as we are. Nat gas, it has a small inventory, and we swing back and forth based off weather. And weather is not really predictable. So it's not the fault of any company or the fault of a country or the fault of anyone. It's just weather swinging us back and forth. If we get really cold weather, guys, I don't even know where the price of nat gas can go. If we get like 2 years of cold weather and we deplete all of our inventory and we struggle to replace that inventory and we get another cold year, I don't even want to know what the price of natural gas will be. Because we could see some pretty nasty upside that we've never seen before in history because weather is impacting electricity demand on top of heating our homes. So weather is a huge play here. Cross-border capital says a chart from our May global liquidity update, better times are coming. And you can see that we've got liquidity. This is where is global money flowing, Eurozone, Switzerland, US, UK, and it's coming out of China and Japan. That's basically a rotation of money. So these are the preferred areas for money to rotate into. Mr. Budget Bill says, do you think someone that's 100% debt free, including the house, could live on $4,000 a month after taxes? Oh, easy. Easy if it's a single person. Now, if it's an entire family, it might be close, but I think you could still do it. Yeah, I think 4,000 a month is definitely a doable figure. You're probably cutting close on some things, depending on what. Even though you own your house, it depends on where you live and what your property taxes are, what your insurance rates are. There could be certain states that have a lot more property tax than, say, my state. My parents, they live in Minnesota. They pay, their property taxes are pretty high. Mine are a fraction of what theirs is. So if you're doing 4,000 a month after taxes, but you still have a huge property tax bill, even though you own your house, some of those property taxes in Minnesota, they could range from 8,000 to $25,000 a year. My property taxes here in Colorado, I just paid them not too long ago. I think they were it was $2,500 for the year. So huge difference, and that is going to play a huge role in this. Lance Lambert says 1984, the last time mortgage rates were 14%. So it says when taking into account mortgage rates, national home prices, and incomes, housing affordability in 2024 is about on par nationally with about 1984. So the affordability is pretty low. What I'm looking for is what are we going to do with rates? If rates come back down, I think they're gonna launch home prices if they come back down. So we'll see. I don't want to claim that rates are 100% going to come down here anytime soon, but I would expect them to come down at some point. Looking at gold to silver ratio at the moment, will the 10th time be a charm, breaking a massive grinding rail? Are we going to break out? Now, this will also signal that we're probably entering a big commodity bull market. If we get silver to outperform gold and platinum outperforming gold, yeah, that's going to be pretty good for commodities. I think we're kind of at the starting line for this to occur. If they lower rates, they're going to launch this. That's my opinion. We've got 77% of bachelor's degrees have positive return on investment, while only 57% of master's degrees do, according to a new paper. The prestige of a school has a lot to do with the return on investment. For example, an English BA from a high-ranked University of Virginia has a 581,000 ROI, while English degree holders at Virginia Commonwealth University have a negative median ROI. The type of degree matters too, especially for those not graduating from the most selective schools. Degrees in nursing and engineering, for example, have high median ROIs, while those in biology and fine arts have much less, probably much lower ones. So that's kind of interesting. I thought that was interesting there. Here's platinum versus silver, guys. This is from the man himself, the legend, Brady. Said even before I called the commodities bear market low back in April of 2020 that he thinks platinum will outperform silver in this bull market. And if silver's at least a 14x from here, which I think, imagine where platinum would be if this ratio goes back to all-time highs. And if silver does a 14x, basically, if it goes to all-time highs for platinum, it would be outperforming by 5.7 times that 14x. Now, I don't know if that's going to occur, but I'm in it. I'm in it to win it, guys. That's all I'm going to say. I'm in it to win it, and if that were to occur, I would be. I don't know what I would be. I don't even know what I would do with that. I'll just say that. Because when this chart moves up, platinum outperforms silver. We've got massive yearly bullish hammer candlesticks there. I bought the crap out of it down here, guys. That's where I swapped my metals and everything. I literally got in the middle of this wick. And at the bottom. They did raise the premiums on you a little bit after some of it. But yeah, if this thing goes to the upside, guys, I'm going to be ecstatic. I'll just be ecstatic. I'll just say that. Grady says, now this is what's crazy here, guys. So this is the platinum to silver ratio that we could potentially move up on. I'm not saying it will, but we could potentially move up. Now check out the silver chart here. It's been saying lately silver will break out soon, and that is a generational opportunity on the breakout. It is now breaking out. So we're breaking out with silver here. And if this goes way up, I can't imagine what platinum could do if it actually rips like that. I don't know what's going to cause it. We'll find out after the fact. But if silver is cruising to the upside and then platinum rips behind it, and silver's at like 100 or 200 bucks, oh my goodness. Because the ratio here, if you look, it goes all the way up to about 120, 130, 140, 150. Let's break out the calculator just for the heck of it. If silver does go to $100, what that means at a ratio of 1 ounce to 120, or let's say 1 to 150 even. So 100 times 150 means that platinum would go to $15,000 an ounce. I would be pretty happy with that. I would be pretty happy with that. And here's platinum. Platinum shortage to persist as EV slowdown fuels demand. Forecast to a deficit of 476,000 ounces this year. Platinum auto catalyst use hit highest since 2017 last quarter. And that's where I'm going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. Mayday coupon code is still active. We've got a Sunday question and answer session that's coming up. And there's a training session going on during that question and answer session. We're going to be training on how to use TradingView and how to look at some of these charts. Kind of all in together is kind of how to use it. All right, guys. We'll catch you later. This is Finding Value.